Hi, David Bassanese here, Chief Economist at BetaShares, and just wanted to give you an update on the economic situation in view of the fact the Reserve Bank has again raised interest rates. So the bank has now raised rates for the fifth month in a row. And really it's on the back of the fact the economy does remain pretty strong. We're seeing very solid consumer spending continuing in the economy, very strong employment growth. So the unemployment rate now is down to around 3.5%, the lowest levels since the early 1970s. The bank does expect unemployment to go a little bit lower over the remainder of this year, down to 3.25%, so a pretty tight labour market. At the same time, inflation also pretty high by long-run standards. Headline consumer price inflation running around about 6% at the moment, and the Reserve Bank expects that to rise somewhat further by year-end to just under 8% on the back of strong oil prices, strength in building material costs, global inflationary pressures as well. So in this environment of strong growth, high inflation, the bank does, I think reasonably see the need to raise interest rates from what are still relatively low levels from an historic point of view. What's the outlook? I think further rate rises are likely over the course of the next 3 to 6, possibly 9 to 12 months really over the course of the coming year. But I think by early mid-23, the cash rate could get up to around about 3%. That's still low by, again, long run standards. It's somewhat less than what the markets expect. The markets currently expect the cash rate to get up to just under 4%, but I don't think that's going to be needed. I think by next year we will start to see a slowdown in the economy. We will start to see inflation easing. And importantly, I think wages growth in Australia, despite the tight labour market, is going to remain relatively benign. That's pretty much it for now. So thanks for watching, and I'll see you again next time.